Ready to go. Alright, good afternoon everybody. Today is Wednesday, the 17th day of September 2025. So the FOMC just came out. At 2 o'clock. And I'm guessing that it is what we expected. Today, obviously, tvtrades.com. Do some live trading. Show you a new tool. You guys don't have access to it yet, but I'll show it to you anyway. And the free trial. If you want to take the free trial, go to tvtrades.com. I don't have that open, but let me just open it up. And let me close a couple of these things. And I will open up tvtrades.com. If you go here, click on any one of these orange things to take the trial down at the bottom. Alright, $25 a week, $90 a month, $9.97 a year. Whichever you want to do down there. This meeting, when it's done, it'll be emailed to everybody who's in here and anybody who signed up for it, but it will also be here. If you go to targetviewtrades.com, go to upcoming and past webinars, it will be right here in this spot. This was last week's. This week's will be right here in this spot. And to sign up for next week's meeting will have a different date on there. It'll be the 24th. Next week's meeting, to sign up for that, will be right here. It'll also be on the home page. So you can sign up for next week's meeting, you can take the trial, you can watch this week's meeting, the whole thing, right there at targetviewtrades.com. Okay? That's the way it works every week. Now, I'm not ready to show you the tool just yet. I want to see if we can... we just had FOMC come out, and right now I expect that Powell's going to be talking right now, and that could be good or bad for the markets. Now, all the stuff that I had anticipated last week, only a little bit of it happened. Alright, the puts that I bought last week, you guys may remember I had drawn up what I thought was going to happen last week. I thought I had it on a better drawing here, a more complete drawing for you, but I guess not. Last week I thought that it was going to go up, and then go down at the beginning of the week, and then go back up as we approached the meeting today, and then go back down. So what actually happened is it stayed up. So oops, I don't mean to look at this. The puts that I bought last week, I still have right now. I can bail out of them today. I was thinking I'm going to bail out of them. Maybe today. I was going to let Powell speak and then see. I'm down on those puts right now because I lost the time value in those puts. It's pretty much priced right about where I said last week. If you guys remember, I drew it out last week somewhere. But I said I expect we're going to get back to pretty much where we were when when I drew the thing last week after the FOMC. I said when the FOMC comes out, the half an hour between 2 and 2:30, you're going to see it spike right at 2 o'clock and then come back down. So I was saying then when it spikes, you would sell your calls, buy your puts. When it comes down, sell your puts. You could buy some more calls, but I expect it's going to end up back here at the middle of this bar when it's all said and done. That's what I was saying last week. The two things that it didn't do last week. If we go to... Where's it? Oh, I think it's right in here. Go here to targetviewtrades.com. Was it on the front of this? No, it wasn't. Nope, I thought I had drawn it in here. I thought I had drawn it in there somewhere, but anyway. It didn't do what I expected it to do. It didn't go up and come down before it went up and came down. So it only did one of those cycles of up and down, but it's okay. Alright, so as far as trading goes right now, I want to look at the DOMs to see what the spread is. See, right now there's quite a bit of a spread here. This is the NQ. It's pretty much untradeable right now. The ES is okay. It's not too much of a spread, but it's bouncing around really quick. The other markets that are they trade a lot thinner. We're not going to trade any of those right now. We'll give it a few minutes. If the ES happens to come up with a trade, we'll take it. Okay. So in the meantime, how's everybody doing? Everybody doing good today? Does anybody have any questions about anything at this point? Okay. So to get a trade here, I'm not going to trade these other markets. So let me just blow up the ES for you, and we'll just look at the ES, okay? Since that's the only one I'm willing to trade right now. Let me drag this up too, so we can look at some things. Maybe even in real time, we can look at some things in here. This is gonna change the colors and put some stuff on there that I don't really have to pay any attention to. Let's get rid of that. Okay. Now we can still take trades and stuff if I see trades developing in here, but it's whipping back and forth across the midpoint pretty quick right here, so we're not really going to see anything. The new thing, if I see it happen, I'll let you know. But basically, let me just bring this up here like this, and I'll show you what I'm looking at. Alright, so I created this new thing down here. Now this is a combination of some other things that you guys have never seen. Well, it's actually a combination of some of that and other stuff that you've never seen. That I'm looking for a certain weakness to happen when the market is moving. Now, because we've had so much, with the FOMC just coming out, there's been just so much movement. I don't know if it's how it's gonna come out, but what I want, what I have done really, is I've created something that's going to let me know a bar ahead of time whether the next bar is going to close up or down. Okay, most of the time it's going to let me know a bar ahead of time whether the next bar is going to close up or down. Like here, if I slide this all the way over, so we're not in the middle of the FOMC stuff. Okay, slide it all the way over here, and we'll just go one bar at a time, and I'll walk you through it. Okay, so what I'm looking for is kind of like this right here, except I want it to be a little bit lower. But we'll put a mark on that one right here, right there. See how right here it weakened? Right there? It weakened on an up close. When it weakens on an up close like that, when it weakens on an up close is what I'm looking for, but I want it to happen more in the middle. Like this right here, if that was an up close and it wasn't, if that was an up close, then that's what I'd be looking for. This right here is what I'm looking for. Right, it weakened on an up close. That means the next bar is probably going to close down. So where I'm drawing these things for you, where I'm drawing these things for you is where, see, I want it to come out of the oversold area that I created there, and it's got to weaken on an up close, like this right here. I think that weakened on an up close. Nope, that was a down close. That was kind of it, but it got out of the range right there, but this is kind of what I'm looking for. You see how this right here weakened, and that was an up close. You can't see it's an up close, but if you look over here, up close is 1. It's true. Is 1, so that's what I'm looking for. Okay, there's kind of another one right there, but it got out of the range. Right here, weakened on an up close. That's what I'm looking for. I've created this thing out of a bunch of things to actually let you know ahead of time. This did not actually weaken. The next bar looks like it weakened. Yeah, that one weakened. But was that an up close? That was an up close, yep. So this got weak on an up close. Do you guys see what I'm doing? ETA for the new tool. It could be as soon as next week. You know. I got it really close to what I want right now. I have it, I did create it so it draws arrows everywhere and all that stuff. But I want to test it out a little bit more. Now, this isn't like the swing trade tool where it took me, months to test it out because the trades, they last for hours. But these trades, the thing about this, I'll point it out to you. I'll show you when I get into it. What am I on here? 7 range? Okay, well, this isn't really. See how it weakened right here? Weakened. And that was an up close right there. So I know it popped out of the range, but when it weakens on an up close, that's what you're looking for. Oops, sorry, didn't mean to do that. I'll just do a couple more, and then we'll go back and look at them, and I'll explain what I mean. And then we can go look at it on a different time frame too. Okay, I'm going to let the markets run a little bit here. We have a lot of time to place trades, so I'm going to let the markets run a little bit, and we'll get to placing trades in a few minutes. All right, there's still a spread on the contracts on the different markets that we're looking at. So, and there's another thing. If you get this right here, where it actually drops on an up close, this is also a trade right here. well, that's weakening, obviously, weakening on an up close. But if it goes down on an up close like that, that is obviously a trade. It doesn't happen very often, but when it does happen, like this right here, this weakened on an up close. This is one right here. Right here, I didn't notice that one. You see over here, if you look at the up close, if that's 1, when it shows weakness, you look at the angle. If the angle value drops right there, then that means it weakened on the up close. I just slid it off, Sid, so you can see that I'm doing this based solely on what I'm seeing down there in the tool down at the bottom. I'm not doing it based on price at all. Okay, I'm not letting price, what the bars are doing, influence my decision at all. I'm doing this just based upon what you see down here. That's why I'm doing it this way. You don't even need this, right? That's what I'm doing. You know, for anybody who's in here right now who hasn't been in here or who doesn't know, I make a living trading. So I'm going to keep creating the tools to give me the best results that I can possibly get, and you guys get the benefit of that. So this is something that I saw, and I thought I could make something on it. See the down close right there? That wasn't an up close on that one. It was a down close, so that's not a thing. But like right here, was that an up close? Nope, that was a down close. This right here was probably an up close. Nope, that was a down close. So when you have the actual bars in front of you, you'll see this stuff, whether it's an up close or down close, like that right there. That was weakness on an up close. Right there. Oops. You see what I'm looking at? Like, I mean, even this right here was outside my range, but it was weakness on an up close. Okay, it was outside the range that I'm looking at. But right there is weakness on an up close. You see, when I say weakness, I mean the angle gets smaller. Look at the angle right here. The angle on that bar to that bar is smaller. When the angle is reduced, that's the angle of attack, I'll call it. For anybody that's been in the military, flown an airplane, you know that. But anyway, it's smaller. And that's what I'm looking for. Okay? When you get that, in this case right here, I'm only looking at things to short right here because I'm going in one direction right now. But it'll work in the opposite direction too. But so every one of these lines right here, the next bar is going to close down. Okay? Without even looking at price, I can tell you that the next bar is going to close down. Or at least have some good downward movement on almost every one of those bars. So how many did I do there? I did 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 of them. Okay, so out of 10, and that was just random that I did 10. But I can go do this on anything. I'll change this simple and we'll do it on another time frame in a minute. Okay. How do I know I got them right? Well, that's what we're going to go look at right now, Sid. That's what we're going to go look at. Okay. Here, let's bring this down. Here's price. You have to click on it like that. Alright. Next bar closed down right there. Next bar closed down right there. Next bar, it actually moved down. It didn't close down, but it moved down before it went down. So that would have stayed within the range of a stop out. Next bar closed down. 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 That's 9 out of 10 actually closed down, and the one that didn't close down was still okay. You see what I mean? So when you get this, when this happens, you'll be able to sell the open of the next bar. Just sell the open of the next bar. Okay, just sell the open of the next bar. Now this is on a 7 range ES. So my whole thing about trading within a bar, that was in the description that I had put when I made the description for the email. So you could execute the whole thing within a range of a bar. You can do that, but what I was talking about, I was thinking about something like, a much larger bar. Like if you go to a 47 range. Now, we'll move all this up. Okay, we'll get price off of here again. And we go look at the same things now on a 47 range. Okay, let's just go look at the same stuff on a 47 range, just any random time. I don't want to be on the, I guess we're going to go over a few days right here, because on the 47 range on the ES, you don't get that many. So maybe we won't do the ES. Let's do an NQ 47 range. NQ, and we'll do the Z 47 range NQ. Okay. Okay, I gotta put the lines back on here because it takes them off when I switch symbols. So let me just put those, the 80 and the 20 back on. Okay, and now the 80 and the 20 are still, these numbers, I'm still working out the, you know, the exact details of what I'm going to do with this, but I want to show you guys, this is a really cool tool. And so like on this, we'll do 100 range NQ. Okay, do 100 range NQ. So on 100 range NQ, when you get a signal on the next bar, you could have like a, say 30 by 60 bracket, and just stop would be 30, a target would be 60, so it would execute in the next bar. You would be in and out of your trade in the next bar. Okay. Now how I'm not looking for a cross, what I'm looking for is weakness, like this right here. Now I want to move this up so I'm not looking at it, but I'll just give you an example, like right here where it showed weakness. It showed weakness and it gave an up close. That means the next bar is going to close down. Okay, look right here. It showed weakness and gave an up close. That means the next bar is going to close down, more than likely. Okay, so that's what I'm looking at. So I'll bring it over here and we'll just run through a bunch of them again. Okay, yeah, let's just start. Well, we'll start right here. Here's one right here. Now I gotta bring this up so I can see the angle and whether it's up close or down close. Okay, so this is one right here. Right there. Next bar is going to close down. Right here. Next bar is going to close down. Oops, sorry. I gotta move that over one. Okay. Now, what you're seeing in real time, this is what you're seeing. Right, you're seeing this up close, that weakness with the up close, and the next bar is going to close down. Now I really want those to be in the middle, like that right there. This one right here, the next bar would close down. This is really what I'm looking for right there. Oops, hang on. I gotta click off that. Okay, this even right here, that's weakness. I don't think that one worked out. I think that's going to be our first stop out right there, probably. I don't know. No, maybe not. See, I wanted to show the weakness inside the range. I guess that would be another one right there, but that's not really what I'm looking for. I'm not looking for it to turn straight down like that. And that, you know what, that wasn't right. And that wasn't right either. That was a down close. That wasn't an up close. That was a down close. You see right over here, it's a 0. So that doesn't count. And this one doesn't count either. That was a 0. This right here would be one. Right here. Now, you guys don't have to worry about it. I'm just showing you how it works. Okay, I'm just showing you how it works. You're going to have arrows. But the weakness is shown down here, Hal. You see this thing right here that I created? It's looking at the angle. Right here, the angle going up. And then if that angle lessens as it goes to the next bar and it stays within this range, and you get an up close, if the angle lessens, showing weakness, and you get an up close, the bar after that is going to close down in almost every case. You see what I mean? If you, let me see, scroll. I guess I can do it one bar at a time like this, right? You see, you'll have them going the other way too, but I'm only looking for these right now. This is kind of one right here. It gets outside the range that I was really looking for. It gets outside the range a little bit. Was that an up close? Yes, it was an up close. So this is one right here, but it gets a little bit outside the range that I was looking at. Oops. So probably what it means is it went down some, but it ended up closing up. This is right here. Right there, that was an up close. Okay. And you know what I'm talking about, this is one here. It gets outside the range a little bit right here. Again, just a little bit outside the range again. But what I'm really looking for, even something like this right here, if that gave you an up close, it did give you an up close, then that right there is going to be one too. See, that bar right there gave you an up close. This right here is on 100 range. Oh, you just crushed a scalp on the S, James? Cool. Cool. Okay. Yeah, I'll get back to trading here in a few minutes. We got plenty of time to trade. Okay, and the markets are going to be wild for a while. So right here was an up close. See, this is something that I thought I created, and I've been working at it for a bit, and I think it's really cool, and it's really simple, and I'm just getting the parameters down. But okay, so that's enough, right? Is that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10? That's 10. Look at that, 10 again. So let's bring these down. All right, bring price down, and we'll take a look and see how it did. All right, this said next bar is a down close. It was. This said next bar is a down close. It was. This said next bar is a down close. It was. This said next bar is a down close. It was. This one here was not. All right, but this one, no, that actually that was within the range. So this is our first stop out right there. And look, it's followed by a second one right there. So we had 2 stop outs on it. And this was outside the range. That was right at the edge of the range. This was outside the range. This was a good one. And that's it. So I guess we had 2 stop outs in there, and one that was outside the range. So let's just go one more. We'll do one, the next one, so we have 10 that are within the range. Hang on. Oh, we had one over here. Sorry. Or those. Oh, those are the other ones that we did, I guess, because they are not qualifying. Actually, they do qualify in here too. Maybe they are the ones we did. Let's see. It's got to come from the oversold and show weakness with a. I mean, this would be one right here, but it got out of the range. Here's one right here. Nope, it's got to come from oversold. Here's one right here. This would be one right here. Alright, so it went down. If you had your stop in the right place, it went down anyway before it went up, and it eventually went down. But this would be one right here. But the whole idea behind it. Right now, the volatility, James, you're talking about the ES right now? Okay, the whole idea behind this is that it's going to happen quickly. You're going to get into a trade, and you're going to be out of that trade in the next bar. Okay, it's not the swing trade thing. However, let me show you something. Let me put the swing trade on here. Now, if you happen to have one of these indications with the swing trade on a gray bar, okay, if you happen to have one of these indications with the swing trade on a gray bar, like this one right here, we talked about this a little bit last week. Sometimes the gray bars, James, was it you last week that was talking about the gray bars sometimes being being great places to trade? This is an example right here where it showed weakness here on an up close on a gray bar. If you have that, and this is something that I'm working on, so the gray bars will be more meaningful. If you happen to have something like that, then you could enter the trade right there and not wait for the black bar. You'd be a whole bar ahead. Okay, this is for the swing trade. It did it again. Did it do it right here? It did it right here too. It showed weakness on the gray bar. Okay, did it again right here. Showed weakness on the gray bar. So if it happens to work out like that, that you have weakness on a gray bar, then you can just enter on the gray bar close. And so you'll be, of course this is all stuff that I'm working on. I got to work out the details for you, and I got to do it myself for a while before you can get a hold of it, before I turn you loose with it. But you can see almost every time you get one of those weakness with a gray bar, the gray bar actually works, right? So I just want to point this out to you. Stuff that I'm working on, stuff that's coming up, and the base part of this. I mean, I could let it loose right now, but I don't want anybody to screw up with it. I'd rather have you not get any bad habits and get it right. But you can see it, right? I mean, you can just look at this and say, okay, without even looking at price, you can say, right here, that showed weakness. Regardless of what the background color is, this showed weakness. So if you got an up close on that bar and it showed weakness down here, the next bar is likely to be a down close. Okay. That's what I'm looking at, how potentially giving you an opportunity to get in earlier. on the gray and black bar swing trade stuff. It's on the swing trade stuff. You can do what I'm showing you right now. You can do on any time frame. You know, this is the NQ. We can do it on a 250 range, and it's the same stuff. If you get an up close on this bar, and you do, it shows weakness. The next bar should be a down close. It was, but it didn't go down very far. If you get an up close on this bar, and you do, the next bar should be a down close, and it was. If you get an up close on this bar, and you do, the next bar should be a down close, and it was. If you get an up close on this bar, and you do, the next bar should be a down close, and it was. It's not really going too far from these on the 250s, but this one did. Okay. But the really large stuff, you can just stick with the swing trades. But I just wanted to point this out to you guys so you can see some of the cool stuff that I am working on for you. And, you know, I'm going to go back to the 7 range ES here for a minute. Okay, see if we got any trades in here. Because this needs to be on the Z contract anyway. All my DOMs are on the Z right now, so I gotta update all these. I haven't traded the Russell all week. I switched to the YM, so I don't even have. Actually, I'm gonna trade this to the YM too. Because I don't have a Russell DOM open. And GC. We'll go to the Z contract on that too. And the GC, we're going to go to a 9 range, not a 500. Okay, and we'll see if we get any trades in here. Alright, so I thought I would get into the new stuff while the markets are still bouncing around with all the FOMC business. How are we doing here? Has it recovered yet? Has it done the recovery yet? Let's go out here and see. It is recovering. Okay. So remember what I showed you last week? I think I showed it to you using the sniper in here, right? Go to invite only, and I think I'll go to favorites, and I put the sniper on. And then inside the sniper I did this. I went to inputs, and I snipe filter. Alright. And what I was saying last week is I was looking for it to pull back down here to this leading edge right here. It hasn't done that yet. It's going to do that. Over the next week, I think it's going to get down here to this leading edge. I don't know how long it's going to take, but what I was saying last week, I bought the puts last week, I think right here on this day. Right here. And it kept putting in higher highs, all-time highs right after that. Today, what happened today is what I expected. No, in a half an hour. I said last week it's going to take like a half an hour. At 2 o'clock, probably going to get a peak, and then sell your calls, and then go down here, buy your puts, and then down here, sell your puts, and buy some more calls if you want. I'm going to end right about in the middle of the bar is what I was thinking. That's what I said last week. But, and that's what it's doing right now. This period from FOMC on is doing what I thought it was going to do. It's the period leading up to that didn't do anything that I thought it was going to do. How? The question is, so it's for string, how about for futures, about the futures alerts? Hang on. Craig said, no surprise when it seems it shows weakness in the direction of trend colored background. It shows strength in the existing direction. Alright, thanks Craig. He likes what I'm doing. My thought process, the creating and all that stuff. So it's for swing, how about the futures alerts? What do you mean the futures alerts, Hal? Wait, I want to see, Phil, did you make it in here? I know you've been, nope, he did not make it in. Okay, I want to show you guys something else. There is this thing out in Telegram. This thing in Telegram, I've shown you this before, it's called this. It's open to the public. It's called TIQ Videos. I created new chart books with the rolled over DOMs. So if you're using CR and you don't know how to roll the DOM, I created a chart book for you so you can do it. This one right here is the micro, and you can go here and get the regular contract if you want to. Okay, I just wanted to point that out if you're having trouble rolling. because it is roll over week, and we did roll to all the Z contracts now. Yeah, this one is for the micros right here. This is a chart book that only has the micro DOMs in it. Hell, and if you go to this page right here, I'll just take you there. If you go to this page right here and you download this chart book, this has got just regular contracts for December. Alright, if you download that chart book right there, you take all the files that are in it and stick them into here. C Sierra chart data. That's where they need to go. C Sierra chart data. Okay, I'll put that here. And this is on the TIQ videos. If you guys don't have access to the TIQ videos, it's open to the public. This is Telegram if you don't know. It's open to the public, and I will give you the link right now. Invite links, copy link, done, cancel. Okay, I'll give you the link right now. If you want to get in there, you can go jump in that channel. I put stuff in there periodically that's just good stuff. Alright. So this is what I thought stuff was going to do on this 30-minute candle. Well, this is a daily, but if you look at the 30-minute candle, let's look at that for a second. On the first 30-minute candle, I thought this 30-minute candle, I thought it was going to go up, which it did. Not that candle. This candle. This one. I thought it was going to go up, which it did, and then come back down, which it did, and then go back up. And then this one started out here at 230, and it tanked even more, which was great. And I should have bailed out of my puts back then, but this meeting started, so I didn't. And then it and then went back up. And so now I expect, at the end of it all, it's probably going to level out right about here, 659, 658, right in that area right here. I think at the end of FOMC. I wrote that down somewhere. It's in something that I did. I think, hang on, I think I have a screenshot of it here somewhere. It's in pictures, I think. Pictures. Here it is. Okay, so this stuff here didn't happen. I bought the puts, but this never happened. This move down, this initial move down didn't happen. This is where it started today. Then I actually changed it so you'd say sell the calls up here. If you had calls, it'd be sell the calls, buy the puts up here. This is all today. This is what last week I said is all going to happen within a half an hour, and it did. It's going to go down to here, and this is where I thought it was going to level out after everything was done. I thought it was going to level out right here. Go down, then you would sell the puts that you bought up here, bail out of the puts. You could buy some more calls if you wanted to, but it was only going to go about halfway up, which it did, and then come back down and settle down in here. I wrote that in last week's meeting, and that's kind of what's happening right now. You see, if you look at the bars, this one right here would be this move right here, and this was the move down, and this is the move back up with a stop in the middle, right there. So it's kind of working out the way I wanted to today. All the stuff leading up to today did not happen. Anyway, I just want to get in there and trade a little bit and make some money right now, guys. Okay. I had a rough day yesterday. Today wasn't so bad. Today I got my goal on the very first trade, but yesterday was not as good as it normally is for me. Alright, so let's see if we can throw a couple of trades on here, make some money, and then we can talk about it. Alright. This is our normal 19 range here. It's pretty fast right now on the NQ, but you can see the other ones are starting to catch up. I have the YM right here, and it's got like a 2-tick spread, and the gold still has a little bit of a spread. The NQ still does too, so the S is really the only thing we can play with. So if we end up getting something here on the S, then I will take it. Alright. So far in all my talking, let me get rid of something here. Let me get rid of the swing trades for right now. And inside the TV trades, I'm going to shut this arrow off. Because I don't really need that. And I'm going to blow it up so we can watch it here. Let's see, since 2:30, there's been a lot of movement since 2:30. I'm not going to go over all the trades right now. We'll just see if we get any. Alright. Questions? So I just talked for 38 minutes, non-stop. Okay, it's your turn. This is not a trade here. It didn't go anywhere near the midpoint. It just reset the midpoint because it came out of the oversold. We need this to get into the overbought, come back out of the overbought. Right, on the yes, that's what we're looking for. So James, you said you were on what? You were on a 19 range? And you did a swing trade on the 19 range? That killed it earlier? That was probably this one right here. I imagine. I just gave another swing trade right here. Alright, well we're in the oversold, so we can take an up close on this on the yes. An up close on this on the yes would be a trade so far. The high of this is 63.50, so it can't go below 61.50. Alright, and it already has, so there's not going to be a trade there on the yes. Cancel all. There's not going to be a trade. It's going to go up to 62.50. Yeah, that's going to be too low. Oh, this is a 19 range. Crap, it's a 19 range. Sorry. It could be a trade here. It's just going to be a much bigger time frame. Alright, good sell trade. I'm sorry, it's going to be 5 points from the bottom. 65.25 is where it's going to be looking to buy. 65.25 right there. Okay. Yeah, so that was a valid trade on the 19 range. Okay, I just entered in at 64.25. Now this is going to go 10 ticks into profit for me to bump the stop to break even. So right there at 66.75 would do it. One more. There it is. Okay, so I'm going to bump the stop to break even on this. And now I'm in at 425, so I'm going to lock in. Wow, that's... I don't even know what I got out of that. I think it just hit the target up there at 25 ticks, I believe. Let me go and check and see what it actually did do there. Where is it? Here it is, over here. 65.25 up to 61.75. So that is actually 26 ticks, I think. Right? I'll show you. Show you the print. Here it is. 65.25 up to 71.25. So that's 6.5 points. So 24, 25, 26 ticks on the yes. Okay, and it's about to set up another one right now. Again, this is on a 19 range, right? So it's going to be 5 points from the bottom of the bar to where it's going to close. I thought it was on a 7 range again when I started out. So it's going to be 58.50 up to 63.50. Is 63.50 below this? I mean, above that, it is. So it's still good. 57 up to 62.50. It's not going to work on this one. This isn't going to be a trade on this one right here. Thanks, James. Alright, see, that one's too low right there. It was below the midpoint. So far we've had just this one trade right here. Okay. For 26 ticks. And that is, what is 26 ticks? Let me get the Wednesday thing up here. Wednesday totals, here it is. Okay, today is 9/17. And on the ES, 26. Bang, $3,250. Sweet. One trade. Okay, so that's our average. If I quit right now, we'll admit the average. Oops, we'll admit the average that we normally do. Hang on, let me put this down. On Wednesdays. Can I show you one of the standard trades like arrow, but using the new tool to help determine to get in and get out for you to stay in and stay out? The new tool that's not available to you guys yet? Joe? Or using the midpoint? Okay. Well, I don't have it on here right now. Let me open it up down here. Okay. So right here, for instance, right here, you would short the open of this bar right there. That's what you'd have been doing. Okay, right here. I'll put the horizontal lines on here, and we can take a trade if it triggers right in here. We can take a trade if we get one. Okay. using the new tool. Now, again, this isn't available to you guys yet because I'm still working out the details on it, but you asked for a demo, so I will give you a demo. Okay. Now, yours is going to have arrows that print and stuff like that. When I'm done with it, it'll have arrows that print and all that. But the first thing was right here, where this weakened right here, and you had an up close. You would have sold the open of that bar. Right there, okay? So the scalp I just made, what tool would have told me to get out? It hit my bracket, is what it did. I had, in that case right there, I had a 10 by 25 bracket on it. Yes. I had a 10 by 25 bracket on it. Okay. So it hit my target on that one. Can I give the bars red and green? I did actually do that at one point. It said, I will. I'll give the bars red and green colors. I wrote that in, but when I'm creating things like this, I'm changing things all the time. I see something and then it's like I chase a squirrel down a rabbit hole and then I'm all over the place. But like this trade right here, JP, the one that I took right here, I was just looking for the up close on or above the midpoint as we came out of the oversold, and it was the oversold right here that I was looking for, not this one. It was this oversold right here. When it came out of the oversold, I was looking for the up close on or above the midpoint, and that's where I had the order. So I got in right there, and I took 26 ticks actually. My target was at 25 ticks, and it slipped me 1 tick positive. Okay, so right now we're in the overbought, so if we hit the midpoint and we close down, I'm going to sell it. Alright, if we hit the midpoint right now, it's going to hit the black line, and we close down, it'll pull it out of the overbought, and I'll sell it. Okay, so let me explain what the whole midpoint thing is, so you guys understand. See, when the background color is blue, you're only looking for long trades, and when it's red, you're looking for short trades. When it's blue, the midpoint is calculated based upon when this goes into and out of the overbought. Okay, that's what it's calculated based on. When it's red, it's based on when this goes into and out of the oversold. Okay, I think I said that right. I might have said it backwards, but anyway, it's based upon the trigger is what it's based upon. Okay, so like right now, if we get a down close, well, I'm sorry, we had this right here, it wasn't anything. We're not going to have anything right now. This right here, this bar right here would have been an opportunity to sell short a minute ago. That one that we had a few minutes ago back up here was one, and this was one right here too. This weakness right here said the next bar is going to close down, so you could have shorted right there at the open of that bar with the new tool that I'm working on. Okay, with the new tool, that's what that said right there. This right here. See that weakness? Now, when I do this over here, you can see the calculations that I created. I had to actually create this because they don't have one of these in TradingView, so I created my own thing using geometry. But right here you can see the angle on this one is 88.50 and the angle on that one is 87.50. So the angle decreased right there. That's what I'm looking for. Okay, like this one right here, the angle went from 87 up to 88. I'm not looking for that. Right, I'm looking for it to decrease and stay below the 80 level right there. That's what I'm looking for. Okay. Now, you see I don't have, when I have this thing on, it paints the bars. If I shut this off, then you have these bars on here. These bars, well, there's a couple of things we have to make sure in here. Not the TV trade, that's going to be down here in trigger. But you got to make sure that that's on, show retracement levels, that's all good. Okay, good. Alright, let me put this back on for a sec. Alright, yeah, we're not going to have a trade there for a minute or two. Alright, so. Take a breath. Does anybody have any questions? I know I'm going over a lot of stuff really fast, but this is all being recorded, so you'll be able to go watch it again later. Let me show you again where you can go watch it later. Well, first of all, there'll be 3 different ways you can watch it. 1, you'll be able to watch it on YouTube. 2, you'll be able to watch it. You have a link that's going to get emailed to you. If you're in here right now, or you registered for this meeting, At the end of the meeting, go to webinar, automatically sends you a follow-up that I create for you. And it's going to have a link to the recording for this. And 3, you can go here anytime you want to see a past webinar. Go to targetviewtrades.com, and click on upcoming and past webinars. Alright, and this has all the past webinars that I've done are all down here. Okay, they're all down here. So you can watch any of those webinars from the past. This is last week's. This week's is going to be right here in about 2 hours. This week's will be right here. Okay, and last week's will be moved out to here. And you'll be able to register for next week's right here, or right here. Alright, right now, if we get an up close on this bar, or if we get an up close on this bar, we're going to go long. It's good low of 53.50, we'll be buying 58.50. Crap, where is it? Crap, I did it wrong again. I keep hitting the wrong button. Okay. My DOM is not set up for the 19 range. The 19 range should be a 25 by 45 bracket. It's still set to a 10 by 25 bracket, but I'm just going to run with it right now. If we get an up close on this, it's going to be a long trade, and there it is. And we're in the long trade. It's got to go 10 ticks into profit to bump the stop to break even. And actually, the stop should be further away, but we're going to hit 10 ticks in a second here. I think. There we go. 10 ticks in profit. Stop to break even. Okay, so we have a 25 tick target up here. You see, that's what it hit the last time, JP. It hit the 25 tick target the last time. So right now, I'm just going to lock in a couple of ticks so I don't lose anything on this. And I'm out with a couple. Okay. You see, that was the up close on or above the midpoint as it came out of the oversold right here. That's what I was looking for. Okay. Of course it works both ways, Greg. You're talking about this thing down here? Greg? Yeah. Yeah, it does. I haven't focused on the downside of it, but it will be the same exact thing on the downside. You know, if we go and focus on it right now, you'll see. It's kind of hard. My eyes have been so just like conditioned to only look for weakness on the upside, but if we look right here, what we're looking for is this right here. Okay, it's going to be a down close showing weakness on the downside. A down close showing weakness on the downside. That means the next bar is going to be an up close. Okay, so this one right here, Greg. A down close showing weakness means the next bar is going to be an up close. And it was an up close. It didn't close up very much, but it was an up close. But if we, I really got to train my eyes to look at it this way. I want to do one bar at a time here. Okay. And so now I'm looking for the weakness on the downside. Okay, so right there looks like it's going to be one. Right here. If this was a down close, and it was, then right here would be one. Okay. Now I'm going to move price off of there. Well, I guess you can see this particular one, right? Down close, next bar is going to be an up close, and it was. So in this case right here, you just buy the open of the next bar, right? In that case right there, you buy the open of the next bar. And looking for the down close that shows weakness. This showed weakness right here. This looks like it might not work out, but this is one right here. Okay, and the next bar moved up quite a ways. This is 19 range, so it moved up about 15 ticks before it moved back down on you. This is, nope, that was a down close. Oh, that's what I wanted, a down close. Sorry, a down close. Down close showing weakness. Okay, so the next bar should be an up close, or have something on the upside. That one had just a little bit on the upside. Look at this. Do I have the TV trades on? I do. So if you look at this, it shows the buy profit ticks. I had 13 ticks on the upside. See, it's right in here. I had 13 ticks on the upside before it closed down. So, like this one right here, you can tell that the next bar after that is going to be a down close, right? And it was. And as it goes through, the next bar after that, that should be an up close or show some strength to the upside. It didn't. That one actually went straight down. That wasn't. See, I have an issue right here where it barely shows any weakness at all. I like to show some weakness like this, serious weakness like that. And that's going to have a down close on the next bar, which it did right there. Okay. This had weakness on the next bar. It didn't have an actual down close. But yeah, so it works both ways. I was really focusing on the upside though. Okay. So we took this trade, so we got 26 there and 2 on this one. This did end up going up pretty well. It hasn't gotten back into the oversold, so we don't have another trade on it right now. Okay. But you can see pretty much all these trades where it was coming out of the oversold, if it was on or above the midpoint where it was coming out of the oversold. Like this one right here worked out just fine. This one right here worked out just fine. That one worked out fine. That one worked out fine. It's a pretty simple process, right? You want the background color to be right. I just noticed the background color was wrong on this one. But you want the background color to be right. You want the background color to be right, and just trade with it. This right here, if you get rid of the background color on this, and you're just looking at the price action, it went up, it retraced 50%, and it went back up. Alright, I didn't notice that the background color was wrong on that. Alright, let's see. Again, if you are in here and you have not taken a free trial, you should get out there and take that free trial. Alright. Go to tvtrades.com. tvtrades.com. You can go to either one of the pages. This is what tvtrades.com looks like, and this is what targetviewtrades.com looks like. For Target View Trades, you click on this, and it brings you to a different place, right over here on the side. But it's all the same. Okay, with TV Trades, you click on the orange thing, and it brings you all the way down to the bottom. Again, it's all the same. Okay, it's 3:25. We have 35 minutes of trading left. Does anybody have any questions about anything? Alright, so just watching this right over here. See what the next bar does. Okay, we'll see if it shows any weakness. This is not showing weakness yet, but if the next bar shows weakness and we get a down close, then you just automatically buy the open of the next bar. Okay. Now, I'm looking at the other markets here, and there's still a bit of a spread in them, so I'm not feeling so inclined to trade the other markets. Yes. JP. I mean, I put a bracket around my trades, so if it works out that it hits my target before it hits what it should hit, given price action, then it does. But let me just answer your question a different way. All right, your question was, I think it was like how to manage a trade and how to get out of the trade and what to look for in a trade, basically, right? So the markets are going up, and then they go down. And that's what this black line is right here. The black line tells you where you've gotten to the midpoint of the pullback. Okay, and that's what that black line is telling you. It's telling you based upon this, because this down here is telling you what direction you should be looking in. And it resets it. Every time this gets into the overbought, it should pull back. And so it resets it for you. And it redoes the midpoint for you. So when it comes down here and it hits this midpoint, what should happen every time you get that, you should get another leg like this, right? That's what you should be expecting. To continue the trend, you should have another leg like that. But at a minimum, it should get to this point, the prior swing high. So when you get into something like this right here, you expect it to get right here. You get into something like this right here, you expect it to get right there. Right? And back here where we had the trade back here, you would expect it to get right here. And where we had the trade right here, you would expect it to get right here. Right? That's what you anticipate out of a trade. Okay, and it's always the same. It's always the same. So what the tools are doing for you, they're telling you where the midpoint is based upon based upon when it should start pulling back, we should be looking for the midpoint. Okay, because I mean, you could, without, if we shut this off, you could say, okay, well, where is the midpoint from? Is it from this swing low? Is it from this swing low? Is it from this swing low? Is it this swing low, this swing low, this swing low, this swing low, this swing low? Where do you find the midpoint? Because you'd be drawing this manually, right? You'd be drawing this manually. You'd be going up to, say, the swing high right here. So if this is the low, then that's your midpoint. But if this is your low, then your midpoint's down here. Alright, so what the tools are doing is they're telling you what you should be looking for, where you should start your highs and bottoms, your tops and bottoms to draw that from. It does it for you. Okay. So in this case right here, well, it did the low from this thing right here, it did the low from all the way down here to all the way up. Well, the first one was right here. No, it wasn't. It was right up in here, right? That's pretty close. Gets your midpoint in there, and then it went up to here, and it moved your midpoint up to there. Okay, and then it came out and it had to reset the midpoint. So when it comes out and it has to reset the midpoint, if it goes a really long way, it has to reset the midpoint, and then it starts it all over again. Okay, but you don't need to really know the mechanics behind it so much, you just need to know what the midpoint means, and that's what it means. Okay, it's calculating where price should pull back to, given this dynamic right here. You know that the markets are always doing the same thing. They're always going up and down, up and down, up and down. And they switch and go down and up and down and up and down and up. It's calculating the midpoint based on that dynamic. Okay. So like right now, we just came out of the overbought. So what we need is a down close on this bar. That's going to put this down into the oversold. And then the next bar, that bar is not going to hit the midpoint. The next bar could hit the midpoint. Midpoint will flatten out and give you an up close. Okay, that's what we'll be looking for. Now, this right here showed weakness. Right here, see that bar right there showed weakness on the up close. So you would sell the open of that bar right there. That's what that said to do, and it just went like a full bar length down. Okay, the new tool down there said this right here showed weakness on an up close. Oops, right here showed weakness on that up close. Okay, and this is a brand new thing. Sometimes I just throw math equations around and see if I can get it to do something cool. And I had a whole bunch of different things that I was looking at. I was saying, okay, well, if this does that, and that does that, and this does that, and that does that, then I might get the results I want 70% of the time. And so I just thought I would take a whole bunch of things, crunch them all together, see what comes out of it. Alright, so now we're in the oversold, and we're testing the midpoint. So now, if we get an up close from here, we're going to enter. Okay, we're going to enter on an up close. So the low of this bar right now is 64.25. So we're buying 69.25 right now. 69.25. Oops. Okay. That's yes. 69.25 is what you'd be buying. It did show a little bit of strength the last time. It did put in a higher swing. So it did show some strength the last time. It's running out of steam though, it seems like right now. It's 3:32. So I don't know how this is all going to work out, but that's what you'd be looking for on this one. Okay. It's 5 points from the bottom of the bar. With a 19 range, it's 20 ticks from the bottom of the bar. Alright, so that closed down and not up. So now we have a low of this is 63, so it'd be 63 up to 68 now. That's what you're looking at. Alright, 63 up to 68. Alright, and this right here, this showed weakness on a down close. Right here showed weakness on a down close. It suggested this bar is going to close up. Okay, that's what it suggests. It's outside the range, but it suggested this bar is going to close up. And there it is. There's the up close, and there's your entry. Okay, that's all you want in a trade right there. No close and an entry. Now I'm in it, but my stop's in the wrong place. I gotta move my stop on this. Nope, I need to move it fast enough. Okay, sorry. I didn't bring that over and show it to you, but I just had a 10 tick stop on it, and it just took me out minus 10 ticks. Sorry, I screwed that one up. So let me put that down. Where is the Wednesday thing? Here. So this is now down to 18 and 3 trades. Okay, so now we're at 22.50. Oops, wrong one. Wrong one. This one. Midpoint not showing on your chart for some reason. JP, you gotta put the password in. Alright, if you put in the password, and make sure TV Trades is checked and check show retracement levels. Okay. That is what you need to do. Okay, I think by default it's off. I think. Alright. Alright, so we need an up close followed by a down close here on this. Now, using this down here, if we get an up close and it shows weakness, then we could just sell the open of the next bar. Right? But using the regular stuff that I'm doing in the morning, we need an up close to get us into the overbought, followed by a down close. That's going to get us out of the overbought. Okay, but if you're looking at both of these things right now, we'll see if this shows weakness on an up close. We'll see if we get an up close, and if it shows weakness on an up close. Okay, it did not show weakness on the up close, so now you gotta wait for the down close. But yeah, JP, once you throw it on, and then you just need to put in the password and click show retracement levels. Okay, and it'll pop up for you. Alright, so 71.75 minus 5, that'd be 66.75. Is that right? I think so. Oops. Sorry. We're building a house. Is that low enough? Yeah, that'll be right there, right at it. That's kind of tough right there. I like to be on or below the midpoint is what I like to see. But I had my order waiting there anyway, so I'm just gonna go to break even on it right now. And we're at break even right now on this chart. Okay. And we'll see where it goes. Looking 4, 8, 12. Done with 12. right there. That was a green one. Where's my Wednesday thing? I think it was in here, wasn't it? Yeah, Wednesday totals. So now we're back at 30 and 4 trades. Okay. This showed weakness right here. I'm sorry I wasn't watching it, but it showed weakness right here, suggesting to buy the open of that bar right there. I'm sorry I wasn't watching that. I wasn't looking out for that. But it said to buy right there. But you see it, right? You see it. It showed weakness right there. Buy the open of the next bar. Bang, right there. Now, it'll have arrows and all that stuff pointing to it for you when it happens. So, I don't think I'm going to have any way to put like a warning arrow up, because there'd be a warning arrow on every bar. You know, like with the gray arrow here. I don't think I'm going to have a way to do that. But in this case right here on the 19 range, this gray arrow right here, see, it was a down close, but it showed weakness right here. You could have bought on the gray arrow right there instead of waiting for the black arrow to give you the up close on that swing trade. Well, I'm going to make it easier for you to see. Okay, I'm going to make it easier for you to see. But but there's one right here, right now. I'm actually in it right now. Here it is. I should have had my stop at break even already. So if I stop out on this, my stop should actually be much more than that. You see, it showed weakness right here. I'm going to break even. I think I actually screwed that one up. I'm going to break even. I'm going to just lock in a couple of ticks on this. 2, 4, 8. And I'm out with 8. Did I screw that one up? Oh, that showed weakness on a down close. I did screw that one up. Okay. It's got to show weakness on an up close, not a down close. If it does something like this right here, and it does this on an up close, if this would have been an up close, because it'll do that sometimes, it'll actually show you a down mood movement like that. Oh, wait a minute. Man, I really screwed that up. I was looking at the complete wrong thing. This showed weakness, not this. I really messed that up. I gotta really pull it together. Alright. Anyway, what time is it? 3:41. We have 19 minutes left. I am looking across the other markets, and just look at the DOMs. You see there's still a spread in there. Still a spread in there. You see how thin everything is? The ES is the only thing that's really tradable right now. It did work, James. There may be something to it working right here with the actual with the trigger too. You know, there's some trigger built into it, but I think the trigger mostly goes from overbought to oversold without stopping in the middle, most of the way. This has got other stuff in it that makes it a little better. So like right here, where it showed weakness on the down close, you could have bought the open of the next bar. Would have been right there, buying that open. Alright, so now the background color is red, and so we're looking for shorting opportunities. It's got to get into the overbought and come out of the overbought. Let's give us a trade right now. Just move the close to the opening price. That is right, Sid. For me, I just right click and do move stop to break even. Right, and it goes right to the opening price. Now you can set that up so that it'll move to break even +1, but you know, break even +2 or 3 or 5 or whatever, or break even -2 or 3 or 5, whatever. You can set it up that way if you want to. I don't want to do that. Okay, so we're in the overbought right here, in the red. We need a down close of this bar to have a trade. Now the last one showed weakness by not putting in a lower swing right here. It showed weakness by not putting in a lower swing. So I'm not really in love with this trade right now. It's consolidating as we get closer to the end of the day, but 68.25 down to 63.25 is what you're looking at, right? 68.25 down to 63.25, and it'd be a sell. That's what you're looking at right now. I think it's still those numbers. Yeah, Massachusetts Department of Revenue. So somebody in the Philippines is sending me a message from the Massachusetts Department of Revenue. Yeah, I'm gonna respond to that. Alright, so it's got a high here of 68.25, so 63.25 is what you want to sell on this, on the down close. Okay, again, it doesn't look like it's got much room to go. It's pretty narrow range right here. So it's not really a trade I want to do, but it's setting up nonetheless. This right here said to sell the open of that bar. I already said it. Crap. Alright, did you guys see that? This showed weakness right here on the up close. It said to sell the open of that bar. Now, selling the open of that bar at 68.25, it already ran down to 63.75, so it already ran down a whole bar length. Yeah, so this just worked too. The one that I screwed up the last time, well, you'd be looking for the down close right here. Showing the weakness right here, it suggests that this bar is going to close down. That would bring this out of the overbought. So you'd be getting in a whole bar ahead of time on this too. Look at there. Janisons. Look at there. I live in the south now. What would I say about the angle indicator for this down move? Right now it's actually a trade right here. I'm in it. I took it. I'm actually going to go to break even right now here. So I'm in it based on this right here. And then once this closes down, there'll be more reason to get into it. Okay, so I'm going to lock in. That's 8 ticks right there. Now that it's closed down is more reason to take the trade. Okay, so I'm going to spread this out. It was at 59.75. I'm going to put it down to 56.75. So I have 8 ticks locked in right there. And this right here, just the down close by itself, is another reason to take the trade. Okay, so right now it should get down here to the prior swing low down here at 60.25. So I'm going to lock in 12, that's 16 ticks right there. 20, 24, 28, 32, and I'm out with 32 ticks on that move down. Yes, the new tool got me in a little bit earlier. Right, because you'd sell the open of this bar instead of waiting for it to close down. 30 ticks, that's a big chunk of money right there. I don't usually think of it in those dollars and cents, but this is it. You know, if you haven't taken the free trial, you got to take the free trial. I mean, this is almost ready to go, but you can see how it'll benefit you, right? See, I did actually create in here. I have a scalp tool in here right now, but I'm the only one with access to it. But it's not ready yet. I want to make it easier for you. Make it easier for me. But this is like the perfect opportunity right here. When it shows weakness as it goes into the overbought. Perfect. This right here showed weakness as it went into the overbought. Well, that one wasn't exactly perfect. You want to show weakness as it goes into the overbought. Right? And then you get in like a full bar ahead. And it's the same thing with the swing trade. If you get the gray arrow and it's showing weakness, you can enter there. Okay. I never stop thinking. I'm always trying to make things better. I trade for a living. I'm up a chunk right now. 68 ticks on the, if you go to the Wednesday thing, where's the Wednesday thing? We now have 6 trades, and we're up 68 ticks on the $8,500. 6 trades. Bam. Not bad for an hour and a half of work. See, this showed weakness right here, but it's not a trade. This is what's going to show the weakness. This would have to show weakness on an up close. On an up close, not a down close. It is. It is 2 weeks worth, James. Alright, so we're not in the overbought. We're not showing any kind of weakness. Okay, do I have this at 0 to 100? Yeah, this is 0 to 100. I'll change the scale on this. So if you want, you could run it with this. Run it on top of that. If you wanted to. Vertical lines. The up and down ones. The ones that I put on manually, Sid? Or you want it to automatically put on vertical lines for you? Okay. The trade that I just took. I mean, I got the arrows pointing to my entries, but this is where the weakness was showed, so I sold the open of that bar. And this right here showed weakness, so I should have been buying the open of this bar. This showed weakness, so I should have been buying the open of that bar. Okay, and in here, this showed weakness. So what was that right here? Since I started, this showed weakness, so I should have been selling the open of that bar. This showed weakness, I should have been selling the open of that bar. This showed some weakness, so I should have been buying the open of this bar. Now that's outside the range. The ones on the downside are outside the range. Okay, but this showed weakness, and I should have been buying the open of this bar, the bar after. Okay, this showed weakness, I should have been selling the open of this bar right here. Okay, and that brings us back to like 3 o'clock anyway. Well, I was just showing you all that. We had another one right here. Look, right here while I was showing you that. This was another one right here. This showed weakness on the up close. So you could have sold the open of that bar, and you would have been a whole bar ahead of this right here. Where it came out of the overbought, it would have been a whole bar ahead of that. Right there. So that was another trade right there. I could have just picked up another 10 or 20 ticks probably. 10 anyway. Is there an available link? I can give it to you. This one. Here, I'll share it out to you. Copy link. Done. Here is the link for that. I'll paste it here and I'll paste it in the other thing too. If you guys want to have that Wednesday thing so you can create your own. Okay, I just shared it out to you guys. Alright, so we have 8 minutes left. And what's the overall market doing right now? Because I still have those puts. I didn't bail out on those yet. Okay, it's kind of going down a little bit. I'm expecting it's gonna sell off more tomorrow. Alright, so what did I just do? I was looking at DS. I want to look just at DS. Oh, you want to have them put on automatically, Sid. I'm going to have arrows on there automatically. Not the vertical lines. The problem with the vertical lines is they end up being just all over the place. It's a lot to look at. But the arrows are smaller and they're easy to look at, but I will have the arrows on there for you. I did a version that I do have arrows on. I think this one might even have arrows on it. I go in here and I hit style. Yeah, see, it's got some arrows on it. Greens and reds, they're not in the right place right now. I've made changes. Telling you, these Wednesday sessions, if you guys come to the Wednesday sessions, you can make enough on every Wednesday session, just about every Wednesday session, to pay for your whole thing. I mean, right now with 10 contracts we're up $8,500. That means with one contract up we're up $850 or something like that, right? Is that right? 10 contracts we're up $8,500. With one contract we're up $850 on the ES right now. Alright, look for weakness. We don't have any yet. But, I mean, every move that this makes, because it doesn't matter what the color is up here, every move that this makes, up or down, you can just look for that weakness. If you get weakness, when it's going up, you get weakness on an up close, you sell. When it's going down, you get weakness on the down close, you buy. The YM50, yeah. Do you want to look at it with this stuff on? How about a 47? I don't have a 50 ready right there. It got rid of the 20 and 80. But you can see the same stuff. And up close right here, you would sell the open index. That one didn't work out. Showing weakness, showing strength. Hang on. What was that? 3 entries on the 50. Let me put the lines on there so we can see it a little better. Okay. There's one. Two. Pretty close. 80. 20. Alright, so let's go back here. I want to start at, say, 230. So this is weakness on the upside. If you get an up close, it would be right there. Okay. That's weakness on the upside. That was weakness on the upside too, but it was out of the range. Weakness on the upside, but it was out of the range. Both of those still worked. But it was weakness on the, this is weakness on the upside. That didn't work, but it was out of the range. This is not really weakness on the downside. You got to have a down close to begin with, and it wasn't really weakness right there. It went outside the range before it showed any weakness. Sorry, it's hard to look at both sides of this. I think that was outside the range, outside the range, outside the range, inside. Outside. This is inside the range, and that was an up close. So this would have been a stop out right here. That one right there would have been the first stop out. This would have been one right here. We haven't really had any on the short side, James. But on the long side, you would have had that one. That would have been a stop out. If you were doing it, not paying attention to the range, you would have had that one right there. You would have had one right here, it looks like. You would have had one right here. That would have worked out. You would have had one right here. That would have worked out. You would have had one right here. That would have worked out. But sticking within the range, you would have had that one that would have worked out. And that was from the beginning of the session. Okay. Alright, so right here, this actually showed strength, not weakness. Right here it got steeper, not less steep. So that's not one right there. Okay, let's go back to the ES, because I can actually trade the ES. ESZ, and we'll go back to, what were we on? Were we on a 19 range? We were on the 19 range, right? Okay, so this right here showed weakness on the up close, right here. That one right there showed weakness on the up close. Oops, not there. The one before. So you would have sold the open of that bar right there. You would have sold the open of that bar. No, you wouldn't have sold the open of that bar using this because it was above the midpoint. You see that? I mean, you wouldn't have sold the close because it was above the midpoint. Where it came out of the overbought right here. You wouldn't have sold that because it was above the midpoint. But you would have sold the open based on the weakness. See, this is really good stuff, I think. And I'll have it out there for you guys soon. By next meeting, I'll have some version of it out there for you guys to use. Okay, and I'm probably gonna put the swing trade inside the TV trades. There'll be an option in here to turn the swing trade on in here. Probably so I have fewer things that I have to enable. And everybody who's got TV trades will then just have to upgrade their TV trades. Just hit the little purple button. And it'll automatically have the swing trades. Okay, I'm probably going to do that so I don't have, when I go to invite only, I have all these things that I've created in here. And you really only want to have a few things in your invite only. I don't want you guys to have 100 things you gotta click on and turn off, and get a group of them up here and you can't even turn them on. And some of you guys who might be using Essential, you only get to use a couple things, so you wouldn't be able to have the things on that you really want. This is actually showing weakness right here. Right here, it showed weakness. So you could have sold the open of that bar right now, but it was outside the range. It showed weakness, but it was outside the range. It did move down about 10 ticks already. If you get a down close on this from right here, that would be a short right there on a down close from that right there. Okay. But I am going to wrap it up, guys. It's 4 o'clock, so I'm going to wrap it up. We had an excellent session, considering. We only traded the ES, but we're up 68 ticks on the ES. We did have one stop out. That was kind of my fault because I didn't move the stop fast enough. But we had a minus 10 on that one stop out. We took 6 trades, and we're up 68 ticks. So $8,500 on this session with 10 contracts, or $850 with one contract. That $850, that's just about the annual fee in one session. So now, is it 19 days now? I think it is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 16, 17, 18, 19, 20. 20 days. 1, 2, 3, 4, 5, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 20 days. So this becomes a 20. Alright, so we're averaging $3,268 a session now. We're up to $65,375 working 20 days, just trading an hour and a half on Wednesdays. If you did that with one contract, it'd be $653. Is that right? No, $6,537 if you did it with one contract. $6,500 with one contract. That's not bad. Just show up on the Wednesdays. Show up on the Wednesdays and take the trades. And some of you guys made a lot more trades than I did in this little session. So, let's wrap it up with that, alright? So on the Wednesdays, so far we're up 65,375. That's over 20 Wednesdays. We started this stuff on Wednesdays on the 7th of May. And so here we are, middle of September. The eyes of September. And we're in the middle of September, and so far we're up 65,375, averaging 3,268 per Wednesday session. That is, of course, with 10 contracts on. With one contract on, you're averaging $326. Okay. Alright, so if you have not taken the free trial, go here. This whole meeting is going to be here at targetviewtrades.com. Oops, this is TV Trades. It's going to be at targetviewtrades.com. This whole meeting is going to be here. If you go to upcoming and past webinars, it will be right here. Everybody who is in here right now will have it emailed to them as well. There'll be an email coming out with a link to this and a link to sign up for next week's. You'll be able to sign up for next week's right here in about an hour. Alright, and if you go to the home page, you'll be able to sign up for next week's here as well. And you can take the free trial from here as well. targetviewtrades.com, click on there, take the free trial. Alright, let me stop the recording.